Welcome into the Crystal Creek Homes podcast. As always, I am your host, Jason Thomsen with Bridge Advisory. We are joined, as always, by Justin Bobier, the founder, CEO, president of Crystal Creek Homes, and Koby Contenti, our resident dealing representative with Rethink and Diversify Securities. Gentlemen, it's good to see you. We're going to cover a bit of a unique topic here today. I think it's pretty relevant. Justin, you suggested that this is something that actually we should maybe talk about. So why don't you chime in, introduce yourself, and tell us your thoughts for today's topic?
Sure. I'm Justin Bobier. I'm the founder of Crystal Creek Homes and still very active in the business. Excited to be here today. But as we have had investors with Crystal Creek over the past 15 years, often you get questions. And I think right now is really top of mind with talking of tariffs. How is that affecting our business at Crystal Creek Homes? The instability. We see market volatility right now. And I think there's just, in general, a nervousness happening with investors in terms of where do I put my money? Where am I? What am I best to do? Should I just stay and hold? What's happening in terms of my investment at Crystal Creek with the market volatility? So those questions often come up, and I think that the reason I suggested this topic today is really to address those concerns that investors legitimately have.
Absolutely. And yeah, the title of today's episode is going to be The Case for Private Investments. The rationale for including private investments in your portfolio. Koby, this is going to be right in your wheelhouse today. We're going to lean heavily on your knowledge and expertise to talk through the benefits of allocating some of your investable capital into private investments. So we'll pass it over to you. You can introduce yourself and we'll get into this conversation. I've got some questions to kind of kick us off. But why don't you introduce yourself, talk about your role at Rethink and Diversify, and how you use private investments to help supplement investor portfolios.
Absolutely. My name is Koby Contenti, and I'm a dealing representative with Rethink and Diversify Securities. The exempt market dealer offers a suite of investment products alongside the ones at Crystal Creek Homes. And it's in the exempt market, so they're private securities. These are not ones that are listed on an exchange like your typical stock. And it provides some great opportunities for some growth or some potential alternative that aren't directly tied to the volatility of the public markets. Of course, there are going to be some factors that affect all general markets on an investment basis, but there are some differentiating factors that I think would be great to discuss.
Yeah, that's awesome. I'm really looking forward to this topic. I think it's important to think about your asset allocation strategy in sort of general terms. In order to put together a strategy that then you can find the right pieces to dial in to accomplish your specific goals. So starting with an allocation strategy, talking about the benefits of private investments, I think it's a really great foundational piece. Now, before we get into talking a little bit more about that, I think we should talk about kind of the current landscape, the situation that we all find ourselves in today. There's a lot of instability in the markets right now. We're seeing headlines every day of stocks that are plummeting, pricing that's really driven by fear and uncertainty. And there is a lot going on in the world right now that's driving that. First of all, there's the approach that you're taking with investors when they're feeling that fear. You're having conversations with them. You're reminding them that their holdings with you in their private investment allocations, those aren't subject to that volatility. So let's break that piece down first. These investments aren't traded on an exchange. So the pricing of the private alternative investments that you offer, it isn't based on sentiment. It isn't based on fear. It isn't based on market activity, buy orders, sell orders, anything like that. The valuation on these investments really comes down to the underlying business, the assets that the business is investing into. And it really does create some predictability in your portfolio, which is what people are really looking for.
Exactly. Yeah, I think there's always a portion of a portfolio. Of course, I'm not going to go after everyone's entire portfolio saying, you should put $100 or 100% of your investments into alternative investments. But I do think there is a piece for it in every portfolio that may be underlooked for a lot of people.
Yeah, absolutely. So when you're considering an allocation into this, that is one of the key benefits. Now it's also a risk, and that should be something that we highlight as well. Because there isn't an exchange for these investments, there is reduced liquidity. You can't just put in a sell order and exit your position in an instant. There's a whole process around redemption. There's specific limits on redemption in most of these investment vehicles. So that's an important consideration to work through with investors as well, considering that liquidity function. But the flip side of that is the lack of liquidity provides predictability. Because the pricing isn't being dictated based on what other people are doing, their fear around an investment or the decision to sell the units, that really doesn't change the value of your underlying investment with an investment like Crystal Creek.
Exactly.
Yeah. So that's a really nice stabilizing piece. And I think that's one of the key considerations that many investors have. Now, Justin, when you're talking directly with potential investors, you're giving updates on your company, you can really focus on just the operations itself, how well the company is doing, what your forecasts look like, what your revenues look like for the year. When you're forecasting and looking into the future, how much predictability do you have in your business on an annual basis when you're looking 12 months out, 18 months out? How much confidence do you have in the forecast that your team is putting together?
I think that's one of the big benefits being a home builder. And I think, prior to being a home builder, I think if you wanted to create a bunch of check boxes on what is your ideal business, one of the things that's really nice about being a home builder and being in the home building business is that we take deposits. Typically, those deposits can range from 10 to as much as 20% of the purchase on a pre-sale home. So when somebody comes in and they decide, hey, this is this is the home I like, this is the lot I like, I'm going to build $1 million house, we would take a deposit of $200,000 at that point in time. We then go through the process and we build out that product, and then the client is responsible to pay us once the contract is finalized and we've delivered the home. If they don't, the way our contracts are set up is that we get to keep that an original deposit as a liquidated damage, and then we would resell that home. By taking a larger deposit, it really protects us from people and market changes and people making a different decision. Yeah. So you're tied in to that contract. So when we go to do our forecasting, it's very, very rare that we would build out a pre-sale home and not have it close. And so it gives us incredible predictability in order to move forward and be able to give a forecast that's very, very accurate. Now, tied into that forecast, of course, we're going to have expected sales, and as well, we're going to also have expected closings. So part of our business will be building what's called a spec home, which is where you're building a home without a customer yet, hoping to get a customer in that 12-month process of during the build process that's going to work with somebody's situation. And if not, if you end up then having it finalized and finished, the question becomes now what should you do with that? So we can either turn that into our rental portfolio, or we take a look at moving that inventory. And that's a little bit where we could be a little bit maybe like a car business where we have sitting inventory on the books and we have to move it. And so often you'll see sometimes there's promotions or things like that. And that would typically be related to that spec inventory as a builder that we want to get rid of. I would say on average, our spec inventory would make up about 25% of what we do as a business. And then, of course, having backup plans always allows us to have, I guess, some comfort, if you will, in what we're doing moving forward.
Yeah, absolutely. That comfort piece, I think, is a really important one. Knowing that you have your backup plans, knowing that you have the ability to take on some of these inventory assets as purpose-built rental property, that really does provide sort of a closed loop for the entire system that provides a lot more comfort, a lot more predictability to your end situation for investors. Now, Koby, I know that's a feature that you've been talking significantly with your potential investors about, and about their their ability to have that line of sight towards the end of the sales cycle, knowing that those units are available for the purpose-built rental option if necessary. How much comfort does that bring to your investors in conversations in unstable moments like this?
Yeah, it's massive. I'll speak onto Zal Park Limited Partnership because that one's kind of the newest. And Crystal Creek has the plan, when they enter the sales center in May, should they not hit the mark, they have that backdrop where they do have the opportunity to begin converting some of these units into purpose-built rental. Some of these units don't start construction until many months after May, so it gives them a little bit of that flex period to kind of determine on how they're going to move forward. But no, it's massive for anybody looking there. What happens if the homes don't sell? Well, we have this backup plan and it provides a lot of comfort.
Yeah, tremendous. And Justin, what have you been seeing in the rental markets recently? I know we went through a little bit of a softer period there for a while, but it seems like things have picked up again.
Yeah, like Calgary in particular, absolutely spiked on the rental side of things in May of last year. And we've seen a softening of the market since May, where rental rates have come off about 10% in the Calgary market. However, we're certainly seeing some strong demand recently. And I think that comes along with the spring market, if you will. And we're seeing rates starting to go back up, and we're certainly seeing a lot of interest in the market right now on picking up rental product.
That's tremendous. So knowing that we have a little bit of fluctuation that does occur in the rental market over time, that's another thing where we can kind of ride through some potential market fluctuations through that rental product side of things. You may get slightly lower rents on contracts that